Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. As usual, I'd like to start our videos by looking at our risk disclaimer, and I'd like to first of all remind you that all examples in these videos should be considered as hypothetical. They weren't actually traded. We have to say that for regulatory purposes. Also, remind you there's risk of loss in all trading and investing. All trade decisions are your own sole responsibility. Yes, you will have losing trades. It's a fact of life as a trader. We all should know and understand that losses can, will, and do happen. I'll say that again. Losses can, will, and do happen. But over time, we hope to have trades that are where our profits are larger than our losses, and that's what makes money over time. It's not necessarily having a high percentage of winners. So, with that in mind, I'd like to look at one of my favourite trade setups. It's what I've nicknamed the Holy Grail trade setup. This is a new trade setup we have in our MTPredictor 8.0 that's going to be coming out soon, we hope, and it's also in our NinjaTrader 7 add-ons and NinjaTrader 8 add-ons. And you can see here I'm looking at a chart of gold today here, with a great example unfolding on a 15-minute chart of gold. Here you can see it is our TS1 HG, standing for Holy Grail. So what is a Holy Grail trade setup? Well, it's a trade setup where we're looking at trading the wave 3. In other words, if I put the Elliott wave sequence on here, can you see how this was a wave 1, this was a wave 2. Our wave 2 subdivides into a minor ABC. That's what our TS1 setup finds, and then we're looking to trade into the typical wave 3 WPT. In other words, we're looking for a wave 3 kind of swing. Why do we like that? Well, if I just clear this off and I place the analysis on, it means that if we're trying to catch the end of the wave 2, it allows us to get in with small controlled risk. Remember, we use correct position sizing, in this case using 2% of a sample $20,000 account. And because wave 3 is the strongest and longest in a completed 5-wave sequence, ideally we're looking to catch a long move, in other words a big move for a small initial risk. And in this case you can see gold has just tagged the typical wave 3 WPT, where the profit would have been approximately 9 times the initial risk, or 9 times greater than the initial risk. This is why I've nicknamed it the Holy Grail, not because it has a high percentage of winners, but because when the winners come through, they're large in relation to the initial risks. For you guys who are more experienced, let's go out to the higher time frame chart. So from a 15-minute chart, let's go out to an hourly chart. Here we are. Now remember what we do. We place our DPs, which are our leading support and resistance areas, on the chart in advance. So before this low came in here at all, we'd have gone back to this point. In fact, I'll do it on the training mode. We'll go back to here somewhere. Here's the last pivot low you can see. Let's right mouse click, do DP, and you can see that's on the chart in advance. So as the market comes down into it, you can see you're at major support. In other words, you're at an area of where you're anticipating major support to come in. If I just turn training mode off, you can see that now that low beautifully. So what does that mean for us on the shorter time frame charts? If I go back down to the 15-minute chart, what that means is, if I scroll out a bit, can you see how this low here came in at our higher time frame support, our major higher time frame support? So in other words, this is an important low. This is where my unique view of Elliott wave comes in, which I've developed over the years, which I've nicknamed the isolation approach. In other words, I'm not looking at Elliott wave patterns to unfold all the time, because I believe that markets go in cycles. Therefore, at least half the time you won't know what kind of pattern the market's in. It's basically in what I call the don't know area. The market's cloudy, it's unclear. You can give it whatever name you want. Therefore, trying to place an Elliott wave count on the chart or trying to do analysis on the chart is quite frankly useless. In other words, you'll end up in basically confusing patterns and things that don't work, and it's all that kind of area where the markets are going nowhere. So what I believe is that markets are only in a clear pattern about half the time. So only about half the time should you be looking to do any meaningful analysis. So what does this mean? Well, it means that when we have a market coming in at a higher time frame support, we then start our sequence there. So in other words, we don't look at Elliott wave patterns in this part because quite frankly it's very confusing, we don't quite know. But because we're coming in at a higher time frame support here, we can say, this is now an important low. So off this important low, we're then looking for an initial rally, and an initial rally off an important low will be deemed a wave 1. We're then looking for the market to retrace back into a wave 2. If I put the Elliott wave intermediates, you can see it goes back into our wave 2 or B WPT. But because this is coming off an important low, this would be anticipated as a wave 2. I'll just clear that all off, and we're looking for, if I do Elliott wave minor, we're looking for this decline to unfold as either an ABC, or for a TS1 there's a unique combination of ratios that are the same as a typical wave 3 WPT, so that's why that's found as a 1, 2, 3. But the point being is that this is the initial move, wave 1, the initial correction, wave 2, off the wave 2, without anticipating. Remember, I say anticipating, we don't predict, we don't say it's going to happen. We're anticipating a wave 3 swing. So as we've seen already, we get into the trade here for an initial risk of $360, 2% of a sample $20,000 account, and then we're looking to go to the typical wave 3 WPT, which, as you can see, has just tagged that, where the profit would have been approximately 9 times the initial risk. So a great example of the MTPredictor Holy Grail trade setup unfolding on gold this morning here, and as such a great trade there. But I wanted to go through this just to remind you what the Holy Grail trade setup is where we're looking to come off a wave 2 to then trade the wave 3, and we can do this because the whole sequence starts off a higher time frame support which we had on our market or had on our charts in advance there beforehand. So a great example of the MTPredictor Holy Grail trade setup unfolding on gold this morning. Again, I must remind you that the reason we call it Holy Grail is not because it has a high percentage of winners. As I said at the start of the video, there will always be losses. Again, I'll say it again, losses can, will and do unfold. Every professional trader knows that. It's not it's not about having a high percentage of winners. It's about when the losses come through, the losses are kept small. That's where we use correct position sizing. But when the profits come through, the profits are large in relation to the initial risks. That's why this is such a good trade setup, because it has a high winner to loss ratio when the profitable trades come through. So that's why it's one of my favorite trade setups in MTPredictor.